The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, let's take a look at some of these markets today. We're not going to do the DAX and the FTSE today because I do not have that information. Yes, it is good to be back in the good old USA. Had to come back a little bit early, but that's okay. The little missus is going to be there for a little while longer, but had a good time. I'll discuss a little bit about the Hong Kong stuff, but we need to cover some of these markets. We've got Rich Anderson coming on at the break. He's going to talk to us about the grain markets. We had a report on Friday. Not too much is happening. It's doing pretty much what we would hope, but we'll see. Take a look at the first chart, folks. This is the Treasury bond market that we talked about when we were down there at that 143, making an ABCD pattern. We rallied up to 150. Folks, we went 2 ticks higher than the 61% retracement and turned down. That could be a really negative thing. We're down a full handle from the high, so that's a sign that it's going to be very interesting. What I'll be watching here is I will be taking that low at around 143 up to that 150 level, a total of 7 points, and I'll be watching for that first retracement back, which, if it's only, about 3 points, I'll be looking to buy that 382 because that ABCD head and shoulders pattern that you see there is very, very powerful. The fact that it stopped at that 618 is a little bit of an interest, but we won't know. If we get below 145 and we're trading at 149, that's a long way away. Then that 161, that 150 will be a really, really important one from my perspective. Remember, these are just patterns. They're nothing more than that. I have to make a little comment about Elliott Wave because I had several emails about the Elliott Wave, and people seem to misinterpret what I'm saying. I mean, I'm not against Elliott Wave at all. I just don't understand it. I don't understand how they come up with these counts between waves 1-3 and 3-5, the 2-4 patterns. You can make a little case for any of those little tiny patterns, but first of all, some of them are untradeable. And the second reason I get a little suspect is if there's not an actual ratio there from another swing and a minimum of 382, then I don't consider it a swing. I just consider it the normal flutter of the market. Maybe that's wrong, but I keep it as simple as possible. I do have something in common with Elliott. We have the same birthday, July 28th, but that's about all we have in common. I read his papers, that way back in 1969, the stuff that he wrote in 1938. The structure made sense to me, but the way I do ABCD is the way that Gartley did it. And, I've just been, helped me out enough. So that's how I look at it. But I do believe in Elliott Wave. And believe me, I'm not going to go against anybody that's got an IQ of 170 like Mr. Prechter has. And, I did the IQ test and I did get 170, but I had to take it 4 times. So anyway, let's just look at a couple of these markets. Folks, you remember when we left here, let's see, Monday was the last time I was on, I believe, and we were looking at that gold market at that 1325 level. That was a perfect 61% retracement. Much like we just seen in the bonds here. That's why this bond could be very, very important. We don't know yet. There'll be 2 keys here. The first will be the first rally back after the sell-off that we get, and the second one will be where the 382 comes in, and that'll be something will be pretty good. We'll see what's happening. No, the 170, Marshall, was done over a period of four tests. I thought you were supposed to add each test. So you get 40 and 40 and 40 and 40, coming out to 160. I was pleased with that, But anyway, that's pretty good. Anyway, let's move on to a few of these other things. Looking forward to seeing you guys on April the 4th, Marshall. So travel safe, and we'll We'll see you then at the usual haunt. Don't tell anybody where it is. We go to this wonderful old Mexican restaurant here in Tucson, folks. It's just a really great place. Let's move on. If you ever get out here, we'll all go to lunch together. Let's take a look here at the Bitcoin. Someone's asked a question about the Bitcoin, and we'll bring this up and take a look at it here. You'll see here that we're approaching that 4,200 level. We've been going sideways between 3,700 and 4,000 now for about 3/4 of the month. So as we come into the end of the month here, we're going to be looking at how these things, come out. One other question that someone's asking is I, made a lot of comments about the banking index and the fact that the banking index looks so very, very bad. And folks, the banking index does look very, very bad. I know this is where we were as of Sunday. Let me bring this up here. I know that we stopped going down on Monday, and we've had a little tiny rally here. And I mean, really, we're trading at 91.76. We got up to 95. That's about not even 4 points. It'll be probably a little higher than that today. But with the CEOs of Wells Fargo gave up, and Morgan Stanley gave up, and one other one I can't remember, but there were three bank guys that left their jobs. But I don't know if that means anything or not. But I believe the banks have problems. When you have an index that gaps down like that, coming off of the 61% retracement, that means a lot, folks. I mean, that's powerful. You can see what's happened in the gold. Now, we're having a good rally today. I think we rallied about $13 off the bottom. There shouldn't be any rally any higher than $17 if it's going to be bearish. But, we were down $68 on the first A-B leg. The C leg came in at, the 13.25, and you subtract, 68 from that, and you're going to be down there, at a quite lot lower level, down around 1260 or so. So that's what we could be looking at in the gold. The silver is still acting weak. Copper's, as Mr. Z's pointed out, looks stronger than the hogs, and they've been pretty strong. So that the copper does look pretty good. So if Dr. Copper is telling us that that's the way things are going, that's the way things are going. Now, as regarding the E-mini S&P, we've had several questions about that, like we always do. What we were looking at yesterday is when I did get back to really, really late last night, had a really bumpy flight. The 777 Boeing, the Dreamliner, is about the biggest plane in the world, and that son of a gun was bouncing around like a ping pong ball for about 5 hours of the 12-hour flight from Hong Kong. So that was a really, really bumpy. I mean, I just really couldn't believe how bumpy it was. I was a little more than a little surprised. Anyway, let's move on here. When we get back from the break, I'll go over what we did in Hong Kong and tell you some of the markets we were watching and that kind of stuff, because it was a lot of fun. We got a lot of friends over there. And when we get, we've got about another 15 minutes to go. Then we'll have Rich Anderson on. We'll be talking about some of the grains and stuff like that. So we'll be covering that also. So we've got a break coming up here soon, I guess. The old clock on the wall tells me that we should be pretty close to that, but we'll post this hog chart because we got up to that 1.618 level, and now we started to turn down. We're already down about 4 cents in the hogs.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I'll just go over what we did in Hong Kong. I've been going there since 1980. When I was with Drexel, it was after gold had topped, and everybody was still talking about, $2,000 gold, and of course it went from 865 down to 230 way back in 2001. So it was in a 30-year bear market. It hurt a lot of people over the years, but I was lucky. I got out near the high. Within a couple $100 anyway. It's a great thing to trade. But here's what we did. We had about 42 people there in Hong Kong. We had them for Thursday, Friday, Saturday. And what we did on Thursday, we were looking for trades that they would try to make money. There were about 17 of the 42 were my students, so those folks were doing pretty good anyway. Some of them do extremely well. But the first trade that we did, of course, was this soybean meal. This was one that I believe we chatted about on Monday because we were making that 135 pattern, beautiful retracement levels, nice little dojis. Everything was lined up. Didn't have to risk very much. And, of course, the meal dropped well over $1,300 in a matter of a few days. And then when the report came out, it had already dropped and it started to stabilize a little bit. So that was the first trade that we did. And then the next trade, of course, was that gold trade at, we all know that was at 1325. That was a perfect ABCD pattern. And it was, also a very, very interesting one. We also had a crude oil trade on the short side that worked pretty good for about 70 pips. It dropped about 150 pips. And now crude oil is getting ready to make new highs here. It's really critical today because if we close above that 60, 80 level in spot crude, that's going to be very, very interesting. That sets up a couple of dollars higher without too much trouble. So those were some of the trades. We did a few euro trades, scalp trades, just to keep everybody's finger on the pulse, and we covered a lot of stuff. But the most interesting thing that I thought was one of the students over there was really involved in options, and we were looking at that pattern that we had in Microsoft that we talked about at length, I believe, either a week ago Friday or on Monday, when we showed all the different harmonics that were showing in patterns in the Microsoft up at that 120 level. And of course we hit 120.60. We backed off, and you see it's trading around 117 this morning, I see. But the gentleman was really smart with options, and he showed the folks an option strategy. It's so far over my pay grade I don't even want to repeat it here. It's something about a debit or credit spread, but he was able to do, Microsoft's trading was roughly at 120, so it's trading at $12,000, and he was able, for the price of about $90, control about $12,000 worth of Apple for 60 days on the downside. And his $90 already made $45 in the first 2 days. So, I don't know. It was very interesting, but, it was really and I'm not an option person, so I really shouldn't have probably brought it up, but it was very, very interesting to see that. Folks, if you ever get to Hong Kong, I'll give a little commercial here. There's 8 million people living on the island, and it's got a lot of land. I mean, people don't realize that the Hong Kong is just one large island, and there's lots of small islands all around. And as you take, when you get over 65, which I've certainly cleared that area, you get a special pass over there for the MTR that you can travel on any train and any bus for 25 cents. So I can go over that whole island for $1. I mean, I could spend the whole day on the bus and not spend $1. And these buses are nice. I mean, they're nice and clean. There's no graffiti. I mean, the streets are really clean. They're always out there, taking care of them and stuff. And it's very, very clean. The only thing is, if you have to buy real estate, it's a little tough, because even a real small piece is $10,000 a square foot. And if you get into the higher areas, it's going to be $20,000 a square foot. The largest record yet has been the house that was sold up on Victoria Peak, which is on top of Hong Kong Island that oversees China. It's just a beautiful area, and that's the most expensive area. And a house there was 4,000 square feet with a 3-car garage, tennis court, and a swimming pool, Spanish style. And it sold for $440 million US, folks. I know that seems like a lot of money for a house, but that's what it sold for. It had the best view of the whole city, but that's a lot of money. We'll look at some of these other things. We'll see. That's what who said that, Terry? Buy land, they're not going to make any more of it. It was Will Rogers. Good old Will Rogers. Very good, Terry. You win a big prize for that. We'll put that in the mail to you as soon as we can. All right, let's move on to a couple other things that we want to. I did want to bring up we did have that big drop in soybean meal that worked out relatively well. Someone's asked a question about the gold. Folks, we've had a pretty big drop. We went from 13.25 down to what, 12.84, something like that. We rallied back, about $13, $14. No rally should be more than $17 if it's really bearish. So take the low that you're looking at. We're now rolling over to the June contract, and so we'll be following June from right now. That's trading around 1302, 1303 the last time I checked. So watch that one. But that's an interesting one. But this is just we're getting a little bit of a snapback rally here. That's mainly what we're looking here. You're still seeing the soybean chart? Well, that's because I don't have an updated gold chart, and I wish that I did. Remember, folks, I didn't get home here till 11:30 last night, so I haven't been to bed. And it was a really bumpy flight. And then after we got into Smell A, which, boy, don't go through that city if you don't have to, folks. It's a total disaster. And had a little layover there, delays and stuff. But anyway, that's what we're watching here. Here was another one that was real interesting that we also did. I forgot to mention this because I talked about this on the air here last week on Monday, I remember, because we were looking at this area here of the 78% level on this came in at the 478 level. We hit that. There was a nice little 3 drive there. You notice those cycle highs that were there, folks? Those were spot on lunar cycle stuff. So we did back off to the 382 retracement. So it's important to watch May wheat, because if we can stay above 460, it looks like it's got a chance to have legs. That's what it looks like to me. So that's what I would be sort of watching as we look at some of these things here this morning as we watch some of these things unfold. We're going to have Rich Anderson on at the break, so please stay tuned, because Rich has always got some great stuff for us. Also, folks, if you trade natural gas, pay close attention to it down here at this 268 to 262 level. That's a nice retracement Gartley pattern if you'd like that one. I don't have time to post it, but it looks real interesting. My alerts just went off to tell me we got to 268 again. And as long as we stay above that 262, it looks like it could have legs, but it's still a bit early. And we won't know whether that'll be the bottom or not, but should be really strong support around that 262 level. We're 268 right now, so that's what we're watching. Well, stay tuned for Rich Anderson.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line. Rich, are you there?
Good morning. Yes, sir.
Good morning. How you doing, buddy?
Doing great. We're actually going to see 60 degrees, instead of being 60 below wind chill, which it was back in February. I mean, I'm getting excited.
Rich, you had snow in March. A lot, didn't you? I mean, you were loaded up. Yeah. Wow.
I still have snow on my lawn, and we've had 40s and 50-degree temp, but it was deep, and it's.
Oh dear. Well, this melted snow, will that have effect on the corn planting and some of the other stuff that's going to be going in soon?
Well, they've been talking about the flooding, and in the low spots, of course, it's just saturated. But in this day and age, they have this huge equipment so that they can plant in literally half the crop in a week, almost. I mean, so
wow, holy cow!
In April, that'd be a huge conversation piece. Right now, the conversation pieces are the dollar, gold, and China. Those are the three big dogs.
What do you think is the outlying result here with this China thing? What do you think is going on?
Well, I mean, the Shanghai composite was up 3.2% yesterday. Not that I watch it, and that was in anticipation of Mnuchin being in China to try and cut a deal. But the sticking points, intellectual property, but then after that, how to verify and punish if you don't fulfill your promises. The big talk was about how they had bought 900,000 bushels of beans, up X amount from the previous month. Well, that's roughly 30% of what they bought last year. Yeah. The bottom line is that right now at the Gulf, our soybeans are $17 a bushel, $17 a ton, not a bushel, a ton, over Venezuela, and $7 over Brazil. The dollar is the thing that's hurting us. Wow. But a 1% change in the currency, adjusts all that.
Sure.
Real made a 6-month low yesterday, but it's bounced back today. And so, when you're talking about something like beans in the international market, you have to look at the currencies of other countries and what's going on.
Rich, I'm going to post a chart here for the new crops, old crop soybeans, the July, and it really showing a lot of support there at the 78% level at $9 a bushel. Is there anything that runs your radar that maybe that's really strong support, or is this,
I prefer to not try and outguess a report. Report's out today, the USDA report, which will have both the carryover, quarterly stocks carryover, and the acreage, how much they anticipate we're going to plant. That comes out at noon Eastern time, 11 o'clock Central time. I prefer to, let the information come out and then let the dust settle. So I'm not in any hurry.
Especially on a Friday in a down market, I don't think your risk.
The end of a quarter too, and the end of a quarter. So you see these stock guys are painting their charts so that their quarterly reports are going to look very nice. The quarterly report was end of December, and of course, when they had to go talk to their investors, it didn't look so good. So they want to make it look as good as possible today.
Wow. Hey, Rich, what about the piggies? We got up to what, $97 a pound, which is a pretty heavy number. Right. What do you know about what's going on there?
The pig drop report came out yesterday at 12 o'clock Eastern time, 11 o'clock Central time. And basically it showed lots of pigs. The numbers were 102 for all hogs. It kept for breeding 102.2, kept for marketing 102.1. And you can see that in the reaction of the report. Has had on the markets this morning. We've got the June hog down 285, July's down 260. The bullish case for hogs is that we'll get something done with China, and they're going to need to buy pork like crazy. To give you some perspective, they may have liquidated as many hogs, practically as many hogs as we have in this country. So there's no way we could provide all the pork that they might need, and that's the bullish thing. We've gone straight up we're due for a correction, and then if it's only a 38% correction, and we get something done with the Chinese, but the enforcement, monitoring enforcement, and what kind of penalties if you don't, do what you agree to, the hogs can fly.
Wow.
After I guess normal correction, so you trade it technically. But I don't stand in front of reports.
Yeah. Well, that's something we learned many, many years ago where they used to go limit up for 3 or 4 days and more at a time. I remember those days well. Unfortunately, we were able to learn our lessons the hard way, and that's something that was really good. By the way, John Cheverny came out with his wife, and we had a really nice time visiting with them, and he sent me a signed copy of Tom Dittmer's book. And Dittmer lives up there in the San Ynez Valley, there where that big lake is, by Michael Jackson's place when you came up to visit me there in San Luis. He's got a big winery there, and it's really spectacular. It's something out of Lifestyles of the Rich and Famous, but a really interesting book about his life and working at the White House under Kennedy and stuff. It was really cool. Hey, John's a great guy, and it's really nice, Rich. We've been around these guys for so long. We're talking 40, 50 years, and they're still doing the same thing. That's a real testament to what we do is we must really like it. Otherwise, we wouldn't do it.
Well, there's some truth to that, but we're like, the dinosaurs.
Oh,
the park is getting smaller.
Wow! I tell you,
the one interesting thing that was brought to my attention this morning by your good friend Dennis Cartman was the St. Louis Fed's adjusted monetary base is back to the lows. And, money is what fuels inflation and the economies, et cetera. And I think that's part of the reason for the correction yesterday in the gold. And these negative interest rates, we've got almost, $10 trillion right now that's negative interest rates. And look at they're having to raise funds for Deutsche Bank. Deutsche Bank's been penalized by these, negative interest rates from their government for ages. Well, they're not being run very well either, but that's beside the point. Banks can't make money if they've got their reserves, like our banks keep reserves at the Federal Reserve, and they get paid a negative interest rate. You can see what a problem that is. It's very interesting. But I'm kind of excited. I think this is going to be a fifth wave top in the dollar. I'm watching that closely. I'm watching the silver, that lower low yesterday, as I've got my eyes on that. I've got my eyes on the wheat and the corn. I'm pretty excited right now. I think there's some opportunities. I misspoke earlier. It was Argentina beans at the Gulf are down are $17 a ton cheaper. And not Venezuela. Venezuela's so screwed up they don't do anything right now.
Rich, when you said that, I said, when did they start growing beans?
I just misspoke. By the way, the August hogs right now, because they were limited down yesterday at standard ranges, they're down 425 points.
Wow.
So you just wait. You have to report,
Hey, God bless you, Rich, and thanks a lot for coming on, and we'll have you on soon. Thanks again.
Sounds good. Have fun.
Hope you warm up before the 4th of July, buddy.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks. Marshall, is Deutsche Bank ready for a bounce? Well, Marshall, I don't know. It's been under the ground a little bit here. It's still trading above 7. I haven't looked at Deutsche Bank for a couple of weeks, but when I saw that for a bounce, that was like when General Electric bounced. Well, you've got a good sense of humor, Marshall. That's good. Let's take a quick look here at this euro, folks. This is very, very interesting because, we had that really nice 2-point rally coming off of that 111.60, which was the 61% retracement on the weekly chart. But we didn't go any higher than that 113.40. So the key level here, folks, is if we go below that 111.60 on a closing basis, that means that the U.S. dollar is breaking out to the upside above 98. And that would be something that would be very, very interesting because, as Rich Anderson mentioned, that will have effect on these negative interest rates that we're seeing right now. Frankly, I've had several people ask me why anybody would buy a bond that's a negative interest rate. Well, I do not have the answer to that one, folks. I really don't. Because I can understand if you're buying gold, you got something physical. But if you're giving money away and they're charging you for holding the money like they do in negative interest rates, someone has to explain that one to me. I couldn't understand quantitative easing. And I think that's all related to it. We'll see. Yes, copper is El Fuego. It is on fire. It's had a pretty good run here. And I believe let's just double check the copper because it has had a very bullish tone to it here. I believe I got that set up in this area. Oh, shucks, I don't have it. I don't have Dr. Copper here right now, but I will get it late. Let's just do it right now since we have the time. And I'm only hitting on about 1.5 cylinders, so that'll give us something to do here. Let's see, H is right after the G, right? Yeah, there it is. There we go. Dr. Copper is right here. And we hit the daily. Woo! Shut the front door and raise your end. This thing is on fire. Let's take a quick look at this. This is a big move today in copper. Let's just see where we are here. Blow it up so we can take a quick look at it. We're right at the 78% level of last week's range, folks. This is going to be real interesting where we are. Let's just get this up. We're right there right now. That's a high. 295. Let's post this because this is going to be interesting here in Dr. Copper. Let's just get it up here so we can quickly see it here. 1 second. Then we want to talk a little bit more about the euro. You'll notice there's the from the high that we made back in February. And then we double topped again there in March, so we're back again. That really strong level of 295 should be some resistance. We're up about $8, it looks like, in copper today. So it's on a Friday. I wouldn't touch it until Monday. But sure, I would take a quick look at that, make sure that it's working okay. All right. I only got half a chart. Uh-oh, that's not good. Let me do the full chart here. There's what happens when you go to when you come in at 11:30 at night, folks. And there's nothing you can do because you can't go to sleep, but that's neither here nor there. It was worth everything. I enjoyed the whole trip. All right, now this is going to be the full chart for copper. Let's get it up here and take a look at it. The bonds, I went over the bonds, Terry. The bonds hit the perfect 61% retracement at 150 and change, went 2 pips above it. Now, if you're bearish, watch a 382 retracement in these bonds. Right now, let's just take a quick look at them. We've gone down from 150.20 all the way down to 149.07. So the 382 retracement comes in 10 ticks higher at 149.26. If we don't get any higher than 149.26, then you have to assume that that 61% retracement up there at that 150 and change is golden. So that's what I'd be watching. So I'd like to see an ABCD, but there's not much time in that with a Friday. I think you just have to wait. As far as a major reversal in the bonds, and I am, hey folks, look at that bond chart long term. Give me a break. They can do negative interest rates all they want to, but bonds they topped 2.5 years ago. Now they're just, let's look at there. Let's just get this bond chart. Come on, let's be realistic here a minute. Come on, if you like charts, let's just take a look at this. Look. Here's the bonds. Watch. Look at this, folks. We topped back in 2016, 2.5 years ago. You see these rallies that we had? Those are equal rallies. You can see the 61% retracement that we just hit yesterday, 2 days ago, and now that's going to be really key here. That's the same as the rally that we had from March of 2017 into September of 2017. They're very, very similar. This is rallies in a bear market. They can give all the stuff they want to about money supply or whatever, but the chart is telling you that it's acting the same as before. We've got lower tops, lower bottoms. We had a 3 drive to a top pattern, a butterfly pattern, an ABCD, and everything in God's green earth at 177 saying, look out. And now, we're at 149, and, if these make new highs, Walter and I, my little trusty burro, we will be going out into the sunset here in the desert because I do not believe that is going to happen. We could easily get 154. That's not too bad because that's just a 78% retracement of the high from 2017. But negative interest rates, I know they've had those in Japan for a long time, but someday the piper is going to blow his whistle and the rats are going to come down the street. And, they're not going to go into the sea. They're going to, migrate into the population. So take a look at that. I don't know. It's just hey, folks, these are just patterns. I'm a technician. I don't know diddly squat about the fundamentals. Never said I did. Don't intend to do that ever. But, I just look at the numbers and look at the patterns. And when they line up, this gives me a chance to say, yeah, it looks like an interesting situation. Watch the wheat today, folks, because I'm relatively bullish on wheat. We made that big 1.618 expansion. The key for me today, and we'll talk about this on Monday, is this level at May wheat at right around 458. We're trading around 461 right now. As I recall, I haven't checked it this morning yet, but yeah, we're trading 461 right now, but watch it at 458. I know the report comes out and there's going to be a lot of, stuff going on, but I'm going to be buying at 458 and then I'm just going to risk a nickel, be farmer for a nickel, but things have been moving pretty good in the old direction. So, we'll just see what happens. But anyway, watch that very, very closely. Those are the ones that I'm watching, on a really near-term basis. And of course, the report today is really, really important. But, some days you have a feeling about something, and I look at this and I say, it's been down 3 or 4 days. We're not even at the 382 level. It might be a weakness in the corn and the soybeans and stuff that pulls the wheat down. I'm not sure. but that's what I'm looking at. I'm looking for a, it's a strategic move where you only become a farmer for $250, and I'll probably be in and out of the trade in probably less than a second, but that's what I'm looking at. So I wouldn't put this trade on for anybody logical, but I'm I should talk myself out of the trade. No, I do have jet lag, but I'm still alert. Not as alert as I might be, but still okay. I actually feel pretty good. I'm not tired, but the jet lag means that you'll be looking at something and what you're seeing is not what's there. So you got to be really careful. Let's take a break. We'll get back and we'll talk about the banking index one more time.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted a chart of the dollar banking index. You'll notice that we had those gap downs. Actually had 2 of them coming off of that beautiful 61% retracement level. Now we've had 5 days of a rally. If you were to call this a DCB, known as the dead cat bounce, this is it. I mean, you virtually did nothing over 5 days. And this is a very, very shallow rally, in my opinion. Going below those lows at the 50% level would mean that most probably interest rates are getting ready to go higher than not lower. Negative interest rates do not make any sense, folks. even the banks don't do that. Well, some of them do, especially in Japan, but it just doesn't make any sense. My grandfather used to keep his his money in he actually kept it in his mattress, and well, long story. Let's move on to these other things with the gold. We're having a pretty good rally here. Watch the 382 retracement on the gold here from the high we made back at that 1320, because we've already, I believe, since we switched over to the June, we're pretty close to it right now. But let me double check. Yeah, we are above it just a little bit, so that could be a very interesting spot. But if we get above 1314 in the